Hi guys, Max here, and today of course we're going to go through and cover yesterday in the markets as we usually do. It was volatile. That has been the name of the game for about 4 months now, and yesterday was no different. So what exactly happened? Well, equities swung wildly, down mostly as much as 2% at certain points in the day, but during about the last hour of trading they jumped back up, so they ended up near parity. The S&P 500 by close was only down by 0.13%, and the Nasdaq saw a very similar story, just slightly better performance at 0.06% in the upside. The Russell 2000 actually overperformed the rest of the markets and saw 1.24% of gains, which was nice to see for what are mostly overlooked companies. It is though not enough to reverse the recent movement though of underperformance. The Russell 2000 is still down over 23% year to date. Now, as you can see, it was just pretty mixed. Some big tech did really badly, like Apple, Nvidia, and Microsoft, but most did okay though. Financials were slightly poor, as with energy. There was no one narrative across the entirety of the market though. Now, why did the US see that late hour rally? Well, a Fed official, I think it was the San Francisco Fed president, well, she came out and said that a 75 basis point rate hike is not a primary consideration right now, making it seem less likely next month, and the markets like that. Of course they do. They want to see as few and as little rate hikes as possible, so there was a small rally on this. We shouldn't expect it to last though, because this is just slightly irrational behavior. Lesser rate hikes only means more inflation in the long run, and then worse rate hikes as a result to curb in that inflation, so this is just a little bit of irrational markets at work. Now, Europe did a little bit worse. The FTSE 100 was down by 1.56% by the end of the day, and the Stoxx 600 fell by 0.75%. So why did European stocks perform worse? Well, pretty simply, a recession in Europe is practically guaranteed at this point, and everyone knows it now. There are hardly any people denying it. We're just waiting for that second consecutive quarter of negative growth for it to be official, but we're already in a contracting economic environment, and we're already feeling it. In the UK, it's the exact same story with almost nothing different. There is super high inflation, there is slow growth, there's a cost of living crisis and a labour shortage. Things are just not looking good at all, so markets are finally reacting to that. Now, across 2022, Europe and the UK in particular has actually outperformed the US and American equities. The FTSE 100, for example, is only down by 2% year to date compared to a negative 18% return for the S&P 500, but that might be about to change. Now, the dollar continued its strong run, rising another 0.5%. The euro hit brand new lows of $1.03, which is very close to parity. It seems most people right now are actually expecting parity, and that's not good for Europe either. The pound is also doing badly though. Again, this is a Europe-wide problem. It's down to $1.22. Again, a super low level and not good for the UK. Funnily enough though, I've been reading on Bloomberg that the pound reaching parity with the dollar is a major concern and that it's just a matter of time, but I've read nothing about the euro doing the same thing. It is just a little bit funny to see how that bias works, but frankly, it's been that way since Brexit with American media, and it's the same way vice versa ever since Trump was elected here from British media. In reality, it doesn't matter what these journos write. What matters is what actually happens. Now, bond prices rose in price yet again for I think the third day in a row, and yields fell. The US 10-year Treasury yield fell another 5 basis points to 2.87%. Now, some people are saying that this is a reversal to that collapse in bond prices, but personally, I'm not convinced at all. I think we are still going to see higher yields in the future. We just need to wait and tune out these day-to-day moves. Now, Europe saw huge yield declines though. The German 10-year yield fell by 15 basis points and the British 10-year yield fell by 16 basis points. Not small moves at all. Really, that is a huge amount of volatility for what should be relatively stable assets, and it isn't good to see that. Now, oil prices rose slightly by about 1%. WTI crude oil is sitting at about $106 a barrel right now, and Brent crude oil is sitting a tad bit higher at $109 a barrel. Gold prices fell by quite a lot to about $1,820 an ounce. Really nice for those who have been or who want to accumulate gold. Sadly, as a Brit though, with pounds, that price decline is pretty much just being overwhelmed by the price decline of the pound anyway, so it's not getting much cheaper for me. Now, crypto posted some really strong gains after 3 days of awful returns. As you can see, it was green for the most part. Bitcoin is above $30,000 again. Ethereum is above $2,000 again. And they saw about a 5% increase over the last day for those two major coins. And altcoins did a little bit better across the board. Sol, XRP, ADA, and BNB were all up somewhere in the region of 10, 15, or 20%. Now, why were they all up? Well, they all crashed because of that Luna Terra drama, and that drama is now over. It's sorted. Luna is dead. I hate to say it, but it just is gone. It's not even a protocol, and it's not even worth thinking about anymore. Each coin is worth a fraction of 1 penny right now, 1 cent. It's down from over $116 a coin each. If you owned any Luna, you are down 99.99% for the most part. To make it worse, the stablecoin is no longer used by anyone because it's not a stablecoin anymore. It doesn't have a peg, and the mechanism to keep that peg just isn't working. It's a dead protocol. So now the rest of the crypto sphere can just get on with life. Another great thing to see for the crypto market is that Tether has regained its peg again. I made a quick video on this yesterday, and it has regained its value. It's at $1 again, though as Michael Burry says, I may be early, but I'm not wrong. Tether will one day explode and take the entire market with it. It's only a matter of time. For now though, crypto markets and crypto investors are just happy that everything's back to normal, just without their top 10 coin of Luna. Now, on just one final quick note on Luna Terra and that whole ecosystem, there are lots of people and lots of things going around right now trying to work out who to blame for this entire blow up and what's actually going on. There are rumors of Citadel or BlackRock or even the US government itself destroying Luna for ideological reasons, claiming that maybe the CIA had some doing in this, but this is all utter nonsense. There is no evidence whatsoever to indicate that this is even remotely close to the truth. The reality is that there was just a flaw in the system, and that flaw allowed someone to make lots of profit, so it was exploited. And that is actually just capitalism at work, and in my opinion, in the long run, this is a good thing. The only bad thing about it is that it was allowed to get so big before being broken down by this flaw that was always present in the system. Flawed protocols like this, they have no place in the ecosystem of crypto, and something better and stronger will replace Luna in time. This is just market forces at work. The sad thing is that many people lost huge amounts of money investing in this, and many lost their life savings as well. That is, of course, extremely sad, and I really do have sympathy for those people. I think there are even 8 reports of suicide from this crash. And again, that is awful, and my thoughts go out to the people affected by that, and I'm not trying to relish in your pain, but in reality, this was a borderline Ponzi scheme, and Ponzi schemes always break eventually. This was inevitable. We should just try and spot which are Ponzi schemes before they become $40 billion in the future to try and avoid all of this pain in the first place. Now, I am sorry if that was a bit of a short video. I am moving into a new place tomorrow, so I've been rushing this morning to get finished with my work today, so I can pack up this studio, my desk, and everything behind me and get that ready for my move tomorrow. With this will come a new studio or an office, of course. It'll probably take me a few days for me to get it ready perfectly, but there should be my bookshelf and ornaments and everything there, my clock that doesn't work, so it shouldn't be too different. There's also a decent chance I may miss tomorrow's video as well. That will, of course, just depend on how long this all takes me and everything like that. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help out. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord server and exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. Of course, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource of the markets, crypto and stocks falling every week. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get interest on your crypto, so it's earning you money while it sits there. Thank you all for watching. Stay stoic. Until next time.